The State of Crypto is presented by Tron, connecting the world to the power of cryptocurrency.
All right, joining the show now to discuss the state of VC funding in the wake of Sam Bankman-Fried's trial is the managing partner of crypto venture fund Dragonfly, Haseeb Qureshi. Welcome to the show, Haseeb.
Thanks for having me. That was a great sketch, by the way. I really felt like I was in the courtroom.
It's like, seriously, it's like being there. I don't know how, I don't know why we even have cameras. We don't need cameras. We got Nick.
I don't even know why Emily goes. Like, we can just tell what happens through these sketches.
It speaks for itself.
I can't wait to see him repair the Sistine Chapel.
It's such a strange thing that in the U.S. we don't allow, most courtrooms, criminal cases don't allow cameras. It feels so antiquated. Most countries in the world, it's totally fine to bring cameras in the courtroom. But it does give sketch artists a steady line of work. That is the one thing I will say.
Yeah. Nick's going to put them all out of business with his work.
Clearly.
We're going to continue talking about the Sam Bankman-Fried trial now. During her testimony, Caroline Ellison said that an Alameda balance sheet sent to its lenders was designed to mislead them into thinking that Alameda was healthier financially than it really was. She called it a, quote, dishonest document. Throughout the trial, we've heard of several different versions of documents that were circulated to different VCs that, didn't tell the complete picture of what was going on for Alameda. Has this changed how you approach your business? How do you approach, due diligence in a post-FTX world?
No, it's exactly the right question. A lot has changed since the collapse of FTX. I think there was a baseline of trust, especially among Western VCs, that has largely gone out the window now. There's a perception that you need to double and triple check everybody else's work. So it's kind of like blockchains, right? It's like verify, don't trust. The other thing is that FTX was a notoriously opaque business, in the sense that there were a lot of different entities. There was a very complex corporate structure. That kind of thing is now also frowned upon, where people want to see more simplicity so they can really understand what's actually happening from a structuring perspective. The FTX bankruptcy famously was a nightmare just because of how many different entities in different places with different assets there were. And of course, they were all intermingled with Alameda itself. And that kind of thing now is an absolute no-no in the venture world. And so we're seeing a lot cleaner structuring from founders to make it more legible to investors exactly what they're investing into and where the assets are sitting.
Haseeb, I don't know. I'm not totally convinced here because as you say, it is a bear market, right? So, or some people think it's a bear market. So it's that's all fine and good for now. But I kind of feel like if there were to emerge another FTX that had billions of dollars and there was all this FOMO, this would all go out the window. That's kind of how crypto works, right? When, right now there isn't anything like that. Honestly, right? Do you really think that people have learned their lesson?
Here's what I'd say. I think the lesson you can count on is that humans will always be greedy. And that is true for venture firms, it's true for entrepreneurs. That's always the case. However, people do learn lessons, but they always learn the last lesson. So I guarantee you the next big explosion in crypto, there will be other explosions. They will not look like FTX, they will look different. And in the same way, with the great financial crisis, you could say people are always going to be greedy, and they are. People continue to be greedy, and there continue to be asset bubbles in different places, but it's never quite the same place. And so I agree with you in principle that there will come a time when investor diligence will get weaker again. Investors relative to entrepreneurs will have less power. They will have less ability to bargain, and they will take the terms that are given to them. But everybody's going to be vigilant. I do not want to invest in the next FTX. So great. Entrepreneurs will make sure that they follow everything to guarantee that they're not FTX. That doesn't mean that there won't be more mess ups in the future. There absolutely will be. They just won't take the same shape.
They might not take the same shape, but now looking at the current landscape, how do VCs view crypto really? I mean, of course, we could say that it may or may not be a bear market. I disagree with Emily here. I think it's a pretty, it's so bear market that it's like sleeping in a bunch of caves right now. But what is happening here? Are VCs in general so afraid of crypto thanks to FTX and Terra Luna and Celsius, et cetera? It's just a list of on and on and on, problem after problem. Have they given up yet on crypto, or who's left to play in this space other than Dragonfly, of course?
Yeah. So look, we're a crypto native VC. So obviously we're still in the space. The people who really deeply understand this stuff and have crypto in their DNA, like the A16Z cryptos, the Paradigms, the Polychains, the Panteras, those types of firms, obviously they're still in the game and they're not going anywhere. The question is really more about the generalists. So if you look at the generalists, Sequoia has really backed off from the space, but they're still active. They're still doing some deals. But you can tell they've really pumped the brakes. They were a big investor into FTX, and they've very much paid a price in the public eye. You see the same thing from a lot of the crossover growth stage funds. So Tiger Global, SoftBank, Coatue, Insight, several of them were investors into FTX directly. And those people have also, they paid a price with their own investors who are upset with them of, hey, you guys came in, you bought the top, you didn't know what you were doing, and you backed this, kind of colossal fraud in the industry. And so people, I think, who messed up in the bull market, they are now sitting out because they've more or less had to go apologize to their LPs. But there's a bunch of other firms, folks like Lightspeed or folks like Redpoint that are very well-established VCs. Even the Founders Fund. Founders Fund just hired Joey Krug, who used to be at Pantera, to lead their crypto strategy. Founders Fund is one of the leading venture funds in the space, founded by Peter Thiel. They're still active in the space. So it's very much a function of one, who actually has made money and has a good reputation of actually doing things right, and two, who didn't invest in FTX. That's largely the best predictor of which VC funds are still active and which ones have bowed out.
And just percentage-wise, what are you guys getting now that when you go into a deal, obviously every deal is different, but how have the terms improved since you have fewer players in the space? How has it improved for the venture capitalists?
Well, it's definitely the case. VCs now have more of the upper hand relative to a year or two ago. A year or two ago, you're a founder and you have a halfway decent project. People are just throwing term sheets at you left and right. People are like, oh, no, I won't even take a board seat. I won't even do diligence. It was crazy if you look back a year and a half ago. Today, it's a very different environment. I would say valuations, especially in the early stage, they're down probably, I would say, depending on the type of deal, 50, 60%, if not more. Obviously, there were some deals that were just crazy, where you had seed rounds getting done at 100 million, 200 million. That's not happening anymore. And Series A, Series Bs, obviously, they've come down as well. So I'd say the prices have come down a lot, but the most significant thing is really the way that deals get done. Deals are much slower and much more methodical now, and due diligence is a real thing. And founders are responsive to it in a way that they were much more dismissive a year or two ago. If I was to ask, a year or two ago, for a founder, like, hey, do you have a data room? They would laugh at me. They would say, like, what, data room? What? You're the only person who's even said the word data. Whereas now it's very standard practice, just like, investing in any other industry, you would expect to have data of, your financial agreements, your balance sheet, your cash flows, that kind of thing. It really was a very different environment a year and a half ago, where these things were not necessarily expected, especially in early to, Series A type rounds.
Haseeb, last week on First Mover, we had Kevin O'Leary. We asked if he had any regrets about investing in FTX. Let's take a listen.
When I looked at the cap table and Bain Capital involved in all of these companies, and believe me, we all look stupid today, but we've seen this movie before. It's not going to change the way we invest. But the point was, the promise of crypto still remains. It's still there.
Love to get your thoughts on Kevin's comments there.
Look, Kevin, I think it was revealed in the book that Kevin got paid, like $15 million? So, look, I don't think there was a lot of diligence taking place on behalf of most of the celebrity endorsements that FTX was receiving. And to be clear, I don't think that's on the people who were taking those celebrity endorsements to try to diligence at exchange. It's almost impossible. It's hard for VCs to do it. Clearly, Sam wasn't letting anybody diligence FTX, really. So the idea that, okay, well, we should go blame the celebrities, we should go blame the musicians and the sports stars, I think it's a little bit of revisionist history to go back and say, well, okay, these people are morally culpable for things that they could not have possibly known. I do think that there is blame to go around, but it sits more on the side of the VCs who actually were in the position to diligence these companies, and the regulators who didn't step in and really do their homework about what was this company that was going around parading themselves as being the most trusted name in crypto, so to speak.
For $15 million, I'll shill for Terra Luna, by the way.
I was going to say $15 million. I would shill for worse than Terra Luna. So I don't blame the guy. I don't blame the guy.
Haseeb, I want to try to change. Haseeb, I just kind of want to change the topic here for a moment from FTX. I ran into you recently in Singapore, and Dragonfly is a very interesting firm because you guys have sort of Asia in your DNA. I know now it's not like an Asia-focused firm, but it started out very much being kind of an Asia, specifically China-focused firm. And so I feel like you specifically have kind of a good view of the Asia market, U.S. market. Could you just there's been a lot of talk these days, which is like it's basically over in the U.S. at least for now because of regulation, and the next bull market's going to come from Asia. And I'm just curious, from your perspective, how do you see that from a VC vantage point?
So I'm a little bit skeptical of the absolutism. Although in some way it could be talking my book to say like, well, everything's going to move to Asia and we're the big Asia firm, so we're great. I just don't think it's true. I think the reality is that despite the efforts of Gensler to try to crush the industry, and despite the attitude of the White House, which more or less really hates this stuff and wishes it would go away, it's very clear it's not going to go away in the U.S. Still, most of the founders in crypto who are building real technology and who are advancing the state of the infrastructure, they're mostly American. Some Western Europe, some Israeli, but most of it is coming from America. And I don't think that's going to change anytime soon. And even still, if you look at what Gensler's trying to do, he's getting a lot of pushback from the courts. And it's very clear Congress is divided on crypto. There's no consensus there. So I don't think it's going to be the White House doesn't like crypto, therefore it's game over, and pack up your bags. It's going to be all Asia from this point on. Asia, of course, is still a very important part of the market. It's where a lot of the consumers of crypto live. It's where a lot of the adoption of crypto is, but it's not going to be able to go it alone. I think this is very much the case. Crypto is a global technology, and a lot of the innovation happens in the West. A lot of the adoption, the go-to-market, and as well as the exchanges come from the East. And I don't think that's going to change. So it's been that way for the last 5 years, and I bet for the next 5 it'll remain that way.
But just to going back to the Asian market, Haseeb, where in your view are the hotspots in Asia? I mean, we're hearing a lot of talk these days about, Hong Kong. I know you have some thoughts about the Japan market, Singapore. I mean, where are the most exciting parts of Asia? I mean, given what you just said, which is a point that is very well taken.
Yeah, so it depends on what you're looking for. So if you're looking for retail trading activity, you can see a lot of it is coming out of Korea, Japan. Obviously, China continues to be active, as we've learned from a lot of the Binance leaks. Binance still has very large market share in China. So we know that there's still a lot of activity taking place in China, Japan, Korea. However, if you're looking for entrepreneurs, which as a VC, that's my bread and butter, a lot of the entrepreneurial activity is really now concentrated in Singapore. There's a little bit taking place in Hong Kong, but I think it's still quite nascent. There's not as much of a developed ecosystem there. And then, I was just in Dubai not too long ago. Dubai is also becoming largely a hotspot in many ways, not just for the Middle East, but also for India, where a lot of the founders in India, where, crypto is kind of in this weird situation where it's kind of banned, it's kind of not banned, but clearly the government doesn't like it. A lot of them are leaving India and going to Dubai as a better place to build. So I see these sort of megacities coalescing where a lot of the founders and a lot of the real entrepreneurial activity is taking place. As a VC, that's where I want to be, because it's the center of where all the ideas are coalescing and where a lot of the best founders are finding themselves.
Haseeb, very quickly before we go, you mentioned that many of the entrepreneurs in this space are Americans. Are you seeing your American founders migrate and setting up in places like Singapore or the Middle East because of more clear regulation?
Some of them are, but honestly, it's a small minority. I think this, again, is a story that people like to tell. I think it's politically expedient to tell the story because it scares American legislators of like, oh no, we're losing our talent to these other shadowy countries or whatever. But I'm just not seeing it, right? En masse, if you look at where are most of the protocols, most of the big teams that are in New York or that are in SF, most of them are staying pat. And even folks who, have been named by the SEC as being potential securities, they're like, look, I mean, even if I go, my friends, my family, my investors, they're all here. Like, I'm just going to stay and fight. And to be clear, I think that's awesome. I think it's better for America that the folks who are here who built this great technology, that they stay here and they stand their ground against incursions, I think, that are illegitimate, and against the idea that everything that we could possibly build in crypto is security, besides Ethereum, because it came about early enough. I'm glad to see that there's that kind of energy and that insistence from a lot of the American founders. I mean, that's very much the American spirit, is a tending toward a little bit of rebelliousness in the spirit of innovation. That's America in a nutshell. So I'm glad to see it.
Dubai is gorgeous, though.
That's right.
It's a really nice place.
Haseeb, thank you very much for joining us this morning, and have a good weekend.
It was my pleasure. Thank you.
That was Dragonfly Managing Partner Haseeb Qureshi.